with a business, you're buying investment real estate, you know some things. It's not my job to convince you of anything. I'm going to, as I said before, I'm going to inform you of the things that I think you need to know. I'm going to empower you to make smart decisions. And then you're going to make your decision.
Welcome to Real Investing, where we talk about real investing for everyday investors. I'm Tim Herriage, your host. I'm here with
RyanHarper, the co-host.
Co-host.
I messed it up last time.
It's fine. It's fine. You're fired. And today we're joined by James Jenkins of RiskWell Insurance.
Just RiskWell.
RiskWell.
Yep.
Did I say it? Kind of like merge those two words. RiskWell.
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 Yep. Emphasis on the well. Life is risky. Risk well. That's our tagline.
I love that.
Yeah, me too.
So let's start off with I hate insurance.
Oh, yeah, everybody does. I hate insurance.
We all hate insurance. But, man, it's tough out there right now.
It really is, man. You know, insurance is one of those things where you hate it until the day you need your insurance company to do something for you. And then if your agent did their job right, they get to walk in and, you know, wearing a cape and riding a white horse or whatever. So,
well, I've got a $75,000 roof on a historic house that we're doing right now that,
yep.
The check cleared. So
there you go, man.
So that was a good part of it.
Yep.
We had big storms in DFW this week. Woke up to first time in 20 years. I actually had to put my kids in the little safe room.
Yeah.
Maybe talk about, and then I had a buddy talking about, one of the roofers, a good friend of mine. He goes, yeah, people are screwed, man. They didn't have wind coverage, and there was no hail. This was just straight line winds. And I was just like, I didn't even think about that. But no, there were no tornadoes. There were no hail. It was just straight line winds.
Yep.
And a lot of people in Dallas don't have wind coverage. What?
I'm just,
it's such a scam, man.
It is a scam because all I'm thinking about is like all those like Katrina people that were like, hey, I have hurricane insurance. Yeah, but you were flooded. The flood came from the hurricane. Did it though? It's like, come on now.
Well, the problem with Harvey, for instance, in Houston, was it wasn't the hurricane that got people. It was the fact that high pressure system stalled out, and you literally had Tropical Storm Harvey just sit on top of Houston for 3 days, which caused all the rains and everything. But anyways, that was it was 2017. I don't want to go that far back, but to your point, Tim, it's that kind of policy without just jumping straight in.
No, we should
sandpaper condom this thing in the episode. It's man, there are good policies and then there are trash policies that don't do what the policyholder thinks they're supposed to do. And I literally have never in my 13 years of doing insurance ever sold an X-Wind policy without discussing it with the client of, hey, here's what the policy does, here's what it doesn't do. If you want to save some coin, we can go this other route. But we always have a standalone wind policy. And anytime we write an X-Wind policy, it's because the underwriter makes us. Because it's somewhere on the coast,
right,
or somewhere like New Orleans, for instance. We insure several hundred properties in New Orleans, thanks to a couple of lenders we work with over there. But man, a lot of those insurance carriers in Louisiana want to write X-Wind coverage, meaning it covers everything excluding wind, and you have to go out to the marketplace and find a wind-only product to make the client whole. Man, that's a giant pain in the butt. But up here, I didn't even realize that people were writing X-Wind policies in North Texas. I haven't heard of that in North Texas. That's wild.
I think people start trying to save money.
Yeah.
Insurance costs are hard.
Out of control, man.
They probably don't understand what they sign up for.
And their agent's not volunteering all the information because they want to sell a policy.
And I was going to ask you my next question, even though, like you said, I hit you with the sandpaper first. Is there like a online guide? Is there an almanac? How does the normal investor understand what coverage they need or don't need?
Yeah. And
it's youtube.com/riskwell. And we got you covered there.
Well, but just to tag that question, because as an investor or as we already have so many things we got to think about. Like, what color does the house to be? The comps, this, that, the money, all those aspects. Do I get the right GC? Is my GC screwing me? Who's screwing me? Because everybody's out to screw each other. When I want insurance, I just want insurance.
Yeah.
I just want the insurance, that the right insurance is in place, that if there's a fire, if there's a flood, if there's a wind, if there's a tree, that I get my money back. I can pay off my lender, and I didn't waste my time.
Yep.
That's the most frustrating thing when it comes to insurance. It's like, I'm not an insurance professional. I don't know what boxes I need to check. And if I check all the boxes, guess what? I made no money.
Yeah.
Yeah.
So how do I prevent that? How do I make life easy?
You know, the way that we encourage people to approach the whole conversation, everybody thinks about, can I get a quote? Can I get a quote? Can I get a quote? And I mean, there's some value to that in some areas. I mean, like personal homeowners, for instance, personal auto is so commoditized, man. It's almost 100% commodity at this point. I sold off our personal lines division of our company because we realized that you guys can appreciate this as business owners. In February of last year, we made the decision to sell because in our year-end calculations in 2022, we realized that personal insurance was 18% of our revenue and 60% of our service volume. And our profit on that part of the company was basically a wash after I pay my people and I have my fixed overhead. And the reason for that is personal insurance is basically a game right now. It's just race to the bottom. Most of the good companies, pick your company, doesn't matter. State Farm, Farmers, Allstate, Travelers, Safeco, USAA, whatever. If you have a reputable company, they're almost interchangeable parts. There's not really any compelling reason to pick one company over another in the personal insurance space. Now, on the commercial side of things, on the real estate investor side of things, oh man, it's the Wild West. There's a lot more moving parts. There's a lot more things you need to take into account. Do I get this? Do I skip that? What limit should I have for this thing over here? What kind of exclusions are there on my policy that my agent may not be proactively telling me about? All that stuff is confusing as hell for most people. And what I think, and I'm supposed to look into this camera right here, what I think is really important, there's my go. I'm looking right at the camera right now. I love your setup here. This studio is fantastic. It's so important to pick the right people first, because the thing I hear so much from our clients is, I don't know. I want to pick an agent and have them tell me what I need to know. I don't know what I need. Tell me what I need. Make it a good price. Let's make this happen. When you go out to the marketplace and you drop into DFW Real Estate Investment Group on Facebook or whatever, pick it, and you say, hey, can I get a quote? You're doing it all wrong, man. You're doing it all wrong. Start with the agent, start with the advisor, and ask them the hard questions. Hey, what do I need to know about this? Tell me about your office. What companies do you represent? What are the common challenges you see for real estate investors in the insurance marketplace in North Texas? Put the grill to these agents and make them earn the right to go out and be your representative. Because if you pick the right agent first, the whole insurance game is so much easier. Vet them like you would any other professional advisor, your CPA, your banker, your financial advisor, your attorney. Treat your insurance agent just like one of those other white-collar advisors. The whole thing is a lot easier.
So speaking of that, without being completely self-serving to yourself, it's like, you've sponsored events in the real estate world. How do you find those guys? Is it just asking those questions? Because if I go to an event and there's two insurance companies, and I'm not an insurance guy, how do I know that James is better than Steven, or Steven is better than James, or Sarah's in there, or whatever?
Well, it's just like anything else. When you're picking a vendor, you want to make sure that whoever it is you're talking to, whether it's RiskWell or somebody else, and there's plenty of good agents out there, you want to make sure that whoever you're talking to is a legitimate, seasoned expert for real estate investors. And not just the super basic mom and pop, oh, I have a rent house. But, I mean, if you're into flipping, make sure that the agent you pick is into flipping. Like, they have the right markets. They have the relationships with underwriters. They understand the policies. They know what's covered and what's not covered. And they can educate and empower you to make a smart decision. Because if you pick Joe Blow insurance agent and say, hey, can I get a quote? What are they going to tell you? Sure, let me get you a quote. Are they going to volunteer? Oh, yeah, by the way, I don't actually know how to write small multifamily. Or, oh, yeah, you're buying a self-storage unit? Sure, let me get right on that. Meanwhile, they're Googling self-storage unit insurance so they can understand the questions they're supposed to ask you because they've never done one before. Are they going to volunteer that to you? No, they're not. So, like, putting the grill to these people that you're considering working with.
But what does that mean to put the? I mean, I understand. But
Ask them the hard questions. Hey, what companies do you represent? What are the common challenges you see for investors like me that are, and if they're not asking you open-ended questions, if they're not coming to you and saying, hey, what are you into? Tell me about the problems in your operation. What are the pain points? What do you hate about insurance? Where do you feel like you've been screwed before? Like, a good agent is going to come to you with open-ended questions to get to understand you and your operation and what you're up to. And if all they're asking is the questions on the insurance application, what's the name of your company? What's the property address? What year was it built? What's the square footage? It's like, come on, that's chump change.
Ron, the problem is it's retraining yourself to ask the right questions. As a lender, we face it all the time. The first question anyone ever asks me is, can you guess?
What's the rate?
What's the rate? Well, I mean, don't you want to know, like, what I can do for you? Don't you want to know if I close on time? Don't you want to know, like, am I a loan-to-own shop? Don't you want to know if I'm going to retrade you the day of closing? Like, what about all these other really important things? First thing I ask an agent is, like, what's the claims process?
Yep.
Because no matter what, I've got to pay a bunch of money, but when I need it, I need it. And there's a lot of groups in the real estate investing space that may have really low rates, and that is great until you have a really big need and you find out that the low rate was indicative of the low performance.
I think one thing, it's really cool about when you record multiple podcasts and back to back, and it gives you time to actually doesn't give you any time, but it forces you to realize some things that are just plainly in your face, which is real estate investing is, we talk about all the time, your network is your net worth, but it's such a relationship-based business.
Yep.
Because even with, obviously, because with the lenders, we talk about a lot about lenders, obviously, it's like, oh, get to know your people, it's a relationship. Yes, it's about the house, but it's about having that relationship. I would never have thought that, oh, by the way, insurance, it's about that relationship.
100%.
And
because he said they posted in the Facebook group, I need a quote. They don't say I need good insurance.
Right.
They say I need a quote.
Right. But having a good team member, it goes back to the book you wrote 15 years ago about baseball and the baseball and blah, blah, blah. That's your book. You can plug it. But about having...
I'd have to finish it first.
That was a great description, by the way. Oh, baseball.
No, but the whole premise was about having, the right team members.
Yep.
Because the reality is, real estate is a team sport, and having a good insurance guy on your team is important. And if I may just throw in this quick story, it reminds me, and I never thought about it until you were just talking. There was a lender that we used to use all the time, and what we liked about that lender was it was a text, it was a phone call funded. But then they got bigger money, and then we had to go to their form, and then we had to go to do their systems and I get it, but you took that human relationship aspect out of it. And now that I'm thinking about it, it's like, yeah, we want to be able to just talk to human do a thing. But the biggest thing was it took that human element out of it.
Yeah. And I feel like that's really important at the beginning of these relationships. But then after that, process and efficiency and ease of doing business becomes infinitely important because, so many of the people we work with, and we insure over 10,000 investment properties at this point. We've got, I don't know, a couple thousand clients on the investor side of things. We don't talk to most of them ever because we give them the link. They save the link to their browser. When they buy another one, they hit the link and it populates in our CRM, and our people at the office run the quote and send it out, call them and say, hey, here's the deal, da-da-da-da-da. You got any questions? Nope, good, bye, next. But after the initial trust building process, which, it takes a few deals for most people, you want to get that vibe of, how is this company to do business with? Can I get a good read on them? Are they scummy? Do I like them on a human level? Could I share a meal with them and have something to talk about? Like, those are really important, intangible, squishy things that most people look right past.
But that click a link, save a browser thing, that comes after experience, that comes after having that relationship built.
Oh, 100%.
Because, this is relatable to that is like, just this week, we did an event on Tuesday, and my bartender service that I used, I forgot to call them a month ago, and I called her Saturday, and she's like, yeah, we can do it. but I've been using this person for 7 years.
Mm.
I don't need a sales process. I don't need a thing, but we have a relationship. Yeah, we go. And it was literally a quick text, boom, it's done. But that was the sales process. So same thing with you is like when it comes to insurance, I don't necessarily want to have a relationship with you. I just want to know that because you're insurance. You're the most part of this business. With respect.
Second to me. Second to the lender. Like,
well, you got the money. He's taking the money.
Yeah. No, you're absolutely right, man. And so many of our clients, that's their response. It's, hey, I just want to know that you're good people, that you're going to have my back when something crazy happens. Beyond that, I don't care. Give me the policy. Let's go. Next. Yeah. Because for most people, the entire insurance world is nothing but a checkbox on a list of things that they have to do to get to closing.
I want to just completely switch this on you because I'd like your take on it. I've said it a couple times recently on stages. I think investors across the nation are massively underinsured right now.
Oh, yeah.
When you look at if you took a loan out, call it 5 years ago, and you got the policy at the amount the lender told you,
yep.
right, which was your loan amount,
yep.
and now your property's gone up $100,000, $200,000 in value, you may have a replacement cost policy at $100,000 or $200,000 less than it's going to cost to replace that house.
Yep.
Because most of the rental properties, I would argue, are probably still going to cost more to rebuild than they're even worth in some cases with inflation and et cetera.
Yep.
Could you maybe speak to, obviously, the listener may think, well, he's just trying to get us to increase our insurance policies. But, I mean, it's a concern I have personally on my portfolio. Could
yep.
you talk about maybe people being underinsured and how to avoid that, monitor it, and adjust it?
My whole process for building valuation is start with the claim in mind. What's your capital position? What's your risk tolerance? Are you electing to have a higher deductible across the board to save some coin? What's your reserve fund look like? And then on the valuation side of things, we want to be really clear on what happens when it comes to claim time. And if you're okay with, you know what, knock the thing down, I'll sell the dirt and move on. I'll get my actual cash value check from the insurance company, sell the land, and move on to the next deal. If that's your business model, by all means, you insure that thing for whatever you want to insure it for that gets your original investment out. You sell the land, you move on. But if you're looking for, like most of our clients are, you want to be made whole in the event of a big scary loss like a tornado or whatever, then you got to write the policy with the claim in mind and asking yourself, how much is it going to actually cost me to rebuild this thing with the same kind and quality that it was before the loss? And for us and our clients, we always start on residential. If it's builder grade, we always start at $125 a foot. And that's it. Like if somebody wants to do less than that, of course you're free to. And just as a quick aside, don't listen to anybody who tells you what you have to do. It is the advisor's job. It's the agent's job to inform and empower. It's not the agent's job to dictate anything.
So when you say inform, like, do you as an insurance agent, or is this common practice, like if I'm an investor and I'm pulling comps, do you also pull comps of sorts and be like, hey, what kind of claims are being actively taken in this area?
Nobody does that. I'll be real with you.
Would that be something smart to try to do?
It's possible to do that, but you'd have to get access to a whole bunch of proprietary data that companies don't want to share.
Okay.
Most insurance agents are going to use replacement cost estimator software. RCE is what it's called in the insurance world. And they're going to plug in the property address to their quoting engine. They're going to look at whatever the RCE spits out, and they're going to plug that in and quote it and run to the next deal.
Well, then just to, you just said start with the claim in mind. If I'm not a real estate, or if I'm not an insurance professional, how the hell am I supposed to start with a claim in mind when I don't know what type of claims are in this area?
Yeah, but think about it. You're not talking about a specific claim. Does it matter if it's a fire claim or a wind claim? If the house is knocked down or the house is destroyed, it doesn't matter what kind of claim it was. It comes back to what kind of house was it?
Right.
What's the value of the house, the rebuild value, not the market value.
But just to be, trauma farming.
Yeah.
Like, okay.
What was that?
What was that little shimmy?
It was a little wiggle.
That little shimmy
I'm
thing?
getting
on
a little
the farming.
I don't even know what that is,
I'm
man.
trying to cause some controversy. I want to get
I
in a
almost
fight
expect you to go like,
I want to get in a little scuffle with Mr. James Jenkins, RiskWell. No, but like, okay, if there's a fire, okay, cool, I have a fire policy. Yeah, but was the fire start with a match or was it start with a lighter?
Man.
Like insurance companies get all tricky dicky like that, you know.
look, here's the thing.
I mean, you know what I'm talking about, right?
I know.
I'm exaggerating.
You're
but I'm
playing
just trying
devil's
to-
advocate,
Yeah.
and I get it. Most people don't have a high degree of trust with the insurance world because most agents and brokers don't act in a way that deserves a high degree of trust. They don't write the policy with the claim in mind. There's three kinds of valuation. We all know what they are intrinsically, but let me just run through them real quick. Market value, of course, is the easiest one. It's whatever someone's willing to pay for your property. The second one is the appraised value. It's whatever the county CAD says your property's worth. It's the basis for your property taxes. In the insurance world, it comes off a replacement cost, which is typically an analysis of the property. What's the square footage? What's the build grade? What's the quality index of the materials used? Do you have a 3-tab roof or an architectural shingle roof? You got standing seam aluminum, some kind of membrane? Like, what do you got? What are we dealing with here? That's the basis for the valuation on the policy. So part of what we do at RiskWell is, we ask people what's your tolerance and what's your plan for the property. If this thing burns to the ground, are you going to rebuild it? Or are you going to take what you can from the insurance company, sell the dirt, and move on? Because the intentions, the goals, the operations of the investor dictate our posture as an advisor.
And a quick follow-up on that. When you talk about replacement costs, how is that replacement cost? Is that something that's just updated right then and there? Because, like, we talked about inflation, we talked about rising costs. If it's like a set number that's set January 1st, or is it always like an evolving type thing? Because, like, if on a spreadsheet it says, hey, it costs X dollars to replace this thing, but all of a sudden it's no longer X dollars, it's X times plus 20%.
Yep.
Like, how is it always updated, or is it like an annual update type thing? And I don't even know if I'm asking the right question.
It's a great question to ask, honestly. And the way that we approach that is just the concept of stewardship. It is the investor, the client expects their agent. You, watching this show right now, you expect your agent to be proactive. You expect them to advise you. Part of the renewal process at RiskWell, and probably the renewal process for a lot of good shops out there, is, hey, let's take a look at the values. Do we still feel like this is a good value for the house? Have you made improvements to the house? Have you added square footage? Did you swap out the linoleum floor for ceramic tile? Did you upgrade the appliances? Is there anything different that we need to know about for valuation? And that's just part of basic stewardship. The set it and forget it is a terrible idea for your insurance program. But
specifically in hyper appreciating markets.
Absolutely.
Because, that value may run way up, but you don't change that insurance policy.
Oh, God.
What?
Oh, I'm just thinking of a horror story where I didn't mean to cut you off,
No,
but
go
I'm
ahead.
just. I have the screamer of a deal, and all of a sudden appreciate it, and then like, oh God,
Well, Ryan, we just recently went through this. So some houses in Garland that, I bought for 80, 90,000 that I insured for, $100,000 because the lender said this is the minimum. Now they're worth 350, and you look up and they're still insured for $100,000,
Yep.
and you're like, wait. Or even there's loss of rents coverage,
Yep.
and it's still at $1,000 a month instead of the $2,000 a month I'm getting now. So I'm literally underinsured by 50%.
well,
Yep.
that's why I had the reaction. I didn't mean to audibly cut you off, but I just I just felt your pain immediately because I'm slow on most things, but sometimes I'm quick, and I was quick on.
Well,
that
and the
one.
example I use, James, is that tornado that ripped through Rowlett a couple years ago.
Yep.
I had a buddy that had two houses next door to each other on the same street that the next morning he had two slabs.
Yep.
Right? There were no more houses.
December 26th of 2015.
Yes.
Yeah.
And he was still insured from when he bought the houses for like 80, 90 grand. And it was the only choice he had was sell the dirt and move on
Yep.
because there was no money to rebuild them.
Right, because back then, it's only $20 a square foot to rebuild, but now it's $200 a square foot.
Well, and if you haven't had a full reevaluation of your insurance portfolio in the last 3 or 4 years, good God, you really have to, because post-COVID, think about supply chain. Materials are out of control. Labor is out of control with every contract from here to Timbuktu. Whatever your property was valued at 4 years ago, bump it by 30 or 40% minimum.
How often should they do that for a portfolio? Or just a
I'd say
single property?
once every 3 years, have a full reevaluation where you go top to bottom on the entire portfolio and make your insurance agent or broker earn their commission. Say, hey, I want to do a evaluation reset on this. Let's take a look and make sure we're not underinsured
Now,
anywhere.
Is there a cost there, or is that just like, hey, you're my broker, do it?
Well, depends on the individual agent. At RiskWell, we have a broker fee built into every policy that is designed to make sure that we can be profitable with all the technology and the service that we deploy, the intellectual property, the resources that we deploy. It's all baked into the broker fee.
I believe you should do it at renewal. And these policies all renew annually. And you should look at what is my debt, what is my income, what is my value, what's my insured, and back to your original answer, what's my tolerance? Like if it's worth 300 now, but I only owe 100, am I okay insuring it at 250? Like, am I good with that? Like, and if I am, I can take that risk, maybe. But I want to now move past this topic because I think a lot of investors really need to know about the claims process.
Yep.
And you may lose a couple carriers here, but recently I had a big roof claim on a house in Rockwall, and it was an old homestead, so we still had Allstate, right? And they were totaling all the gutters on the house because of hail damage, but claimed that no shingles on the house were hit with hail. Amazing, right? Full 360-degree
It's
coverage.
magic.
Magically hit all the gutters around the house, but none of the shingles. Through the process, I found out about this thing called the appraisal clause, where I could get an appraiser, but not an appraiser. It's actually an insurance adjuster appraiser. Mm-hmm. And then Allstate had to get an appraiser. And then they had to pick an umpire. And they met with the umpire at the property. And the two appraisers argued about it. And the umpire made the decision. The claim went from like $16,000 to $60-something thousand. The umpire won.
Yep.
What advice for people out there do you have in not only big storms came through, take pictures, document. What advice do you have for people that may suffer a loss and how to get through the claim process in their best interest?
I love this topic because this is the meat and potatoes of the entire insurance thing. Why do you buy an insurance policy? So that when when a loss happens, you're made whole in the claims process to whatever your anticipation is. The entire thing, aside from that, is selling a promise. The insurance world doesn't have a tangible product. When you go to the building supply store, you walk out with a bucket of nails and lumber or whatever else you have. Insurance doesn't have anything tangible. All we have is a promise. The claim is the only tangible thing that you can look to and say, hey, is my agent doing their job? And one of the things we tell all of our clients, the claim is the most important thing because we can do everything right. We can be amazing on service, give great advice, have good products, have good pricing, a website that's easy to navigate, friendly staff. All those things can be done. But if the insurance claim is wrong, if the claim gets messed up, if it takes 6 months, you're pissed and your agent's a moron.
Yeah.
Am I right?
Amen.
It doesn't matter what you do. If you mess up the claim, you messed up. So I think the greatest thing I could tell anybody watching the show, listening to the podcast, is ask your agent those questions before they're even your agent. When you're interviewing people that might be your agent, say, hey, tell me about your claims process. How are you going to advocate for my best interest when something terrible happens? And then hold them to it.
I think there's a wider point to that. And, there's a sign that I have out, I don't know if you saw over there. It says, never listen to talent. Yep. And what that means is, like, if we're, as a media professional, we're the people in charge and we're trying to make you look good, and the talent tells you, I want to do it this way, sometimes you want to listen to the client, but if you know what you should advocate and really make sure they listen to you. Because, like, as an insurance guy, you'd be like, hey, you need 1, 2, 3 ABC, and they're like, well, I only want to pay for 2 and C.
Yeah, totally.
And you're like, hey, I hear you, but you need to be paying for 1, 2, 3 ABC. And I think, at least in my business, every time that I've caved and let the client, do their thing, it's bit me in the ass.
Yeah.
Because like, oh, we had a recent client where they wanted a budget, they had a low budget and they had a discount and they wanted this and that, and we did all that, and then there were some issues, and we're the ones that fucked up.
Yeah.
Excuse my language. We're the ones that messed up. It's like,
Yeah.
yeah, but you wanted this budget and you wanted this discount, therefore you missed out on all these other services.
Right.
Yeah, but that's your fault.
In my world, we handle this with two very simple things. We always tell people during the process of when they're becoming a client, it is not my job to convince you of anything. You are an adult. You are a grown person with a family of some kind, with a business. You're buying investment real estate. You know some things. It's not my job to convince you of anything. I'm going to, as I said before, I'm going to inform you of the things that I think you need to know. I'm going to empower you to make smart decisions. And then you're going to make your decisions. And if you're about to make a decision I disagree with as your advisor, I'm going to say, hey, I think that may not be the best move. I'm going to say it softly and empathetically because I don't ever like to tell someone what to do with their business. Because again, I don't get to dictate anything. The investor is the one who's making all the decisions. The investor is the one who carries the risk. I don't carry any risk. I'm making my commission. If the house burns down, I'm not paying that money out of my pocket. The investor is the one that carries the risk. So there's a certain amount of awareness of all of this, of, hey, you know what? Your agent's not in charge of anything. Your agent's job is to make sure that you have what you need to make a smart decision. And when something terrible happens, have your back.
So to something terrible happen, I'm your customer. I call. What advice do you? So I call you and say, dude, tornado took out 123 Main Street.
Yep.
How do you tell me to start protecting my
if I
interests?
haven't already done my job advising you before the loss ever happens, we've got a big uphill climb in front of us.
Right.
Part of what we always start with is have documentation of what you've got. Like, keep a file somewhere. If it's a flip to rent, if you bought the house as is, like, have pictures of the house that you have somewhere in a cloud storage drive somewhere. Was when an insurance claim happens, that adjuster's going to come along and say, all right, what was damaged? What happened? And you can say, hey, here's my file folder of before pictures. And once a year, just go around the house and take pictures. Get somebody to, fly a drone on your roof, or, have your real estate friend. There's a million real estate people that'd be perfectly happy to fly a drone once a year, just as a value add, just to get some updated pictures. Have a plan in place before the claim ever happens of, in the event of a claim, this is what we're going to do. And have an inventory of some kind. It makes everything go so much easier. And have some kind of emergency action plan for, hey, I have a roofer that I already have a relationship with, where we have an understanding in the event of a weather event, you're going to come tarp my house. Or, hey, I need emergency whatever. Or if there's a big-time water leak. Like, for instance, where's the water shutoff valve for that property? Do you know where it is? Do you have the T-bar easily accessible somewhere? If you have a tenant living in your house, does your tenant know where the water main shutoff is?
Because what's it called? A duty to preserve? What is it?
Yeah, that's it right there.
Yeah, because like some people are like, well, the roof is leaking and they don't go rush to fix it. But like, as a policyholder, I have an obligation to try to mitigate the damages.
Yep.
And the insurance company typically will pay me back for that.
Yes, they will.
If I document it, right?
Yep.
Like take pictures of what I tarped, get invoices. Like,
yep.
I would tell people, like, don't go be willy-nilly. Like, don't just climb up there and fix it yourself. Like, pay someone and document it,
And
right?
get the invoice and hand it to your adjuster.
Right.
Yeah, 100%.
So I've got a fun question, but also like an embarrassing question.
Those are the best kind.
How often?
As long as you don't wiggle again.
Yeah, that little shimmy thing. I don't know what that was all
you know
about.
what?
I might have nightmares about that later.
I'm going to take a video and send it to you. But on repeat. No, but
A new gift.
how often do you come across people or investors or whatever that, because again, this is just like we've said before, it's just another line item. They got to check the box to buy the house.
Yep.
How often do you have people that just lie to themselves and bury their heads in the sand? Because, like, I used to be at our buddy Mac's place before here, and I had renter's insurance, and I was incredibly underinsured. And then I moved here, and I think it was a year and a half, maybe 2 years before I switched over the address. So I was still paying for insurance at this other place because I had insurance. I guarantee you I'm underinsured or not insured at all as a business or as a renter here, but I'm still paying on a policy that I wrote or was written 4 years ago.
Yeah.
But I have insurance because I'm lying to I know I'm lying to myself, but I'm just being embarrassing authentic for here. But how often are people like that? And then as an insurance professional, how do you go, hey, idiot, get your shit together, get your head out of the sand?
It is incredibly common, and it's just a fact of life. It's a regular part of doing business in the field that we chose to specialize in. You know, there's 1,000 different flavors of insurance agent. People have every specialty from here to Timbuktu. You know, for RiskWell, we're 100% commercial and real estate investor. We work 100% with skilled contractors, which typically means roofers and GCs, technology, healthcare, white collar, advisor, which we break down into other insurance agents. We insure a lot of other insurance agents on the commercial side. Attorneys, CPAs, and what I call miscellaneous consultants, your management and marketing consultants, whatever. And then the fifth one is real estate investors. Of all of those 5 specialties, real estate investors are by far the squirreliest, by a million miles. Roofers are a close second because roofers are roofers, and I don't know what it is about the roofing profession that attracts just some unstable and just weird people. I mean, there's plenty of great roofers out there, but there's also some complete chuck in a truck.
Crack, drugs, cocaine, all the, I mean,
not James's current clients. Not his current clients.
I mean, we don't work with people that we have a trust issue with. And just as a quick aside, I mean, we operate on the one strike you're out rule when it comes to honesty.
Amen.
If there's intentional misrepresentation, you're gone. You're dead to me. I don't care how much money your account represents. I will never lie to you. If you ever lie to me, you're gone.
Because I mean, you're in that world of like, hey, we're trying to protect, and it's very similar to the you're dealing with actual or potential money, you know. So if they're lying,
lots and lots of money.
yeah, because if they're lying to you, that's the F word, the fraud word, right?
Yeah, I mean, a liar is always going to be a liar. If you lie about this, you lie about that. It's just simple math.
Mm-hmm.
It was funny the other night when I had to get my family out of their beds and everything. I was telling you earlier. First kid asked if he was in trouble. Said no, it's a tornado. Come on. The second kid said, "What's going on?" Said tornado. Come on. Wake up my wife. She gets up. What do? I'm like, well, come with us. First thing she does is go look for a wedding ring, because I've been telling her, like, you need to get that thing reappraised. It's been 10 years, and it was expensive as all get out 20 years ago. But it was funny. I was thinking about this when you were just talking about kind of that portfolio review. It's like, I think a lot of people know in their back of their mind that they need to address this, but to go meet the appraiser, like on a jewelry, right?
Yep.
Go meet the appraiser, drop it off a couple days, come back and pick it up, get the new appraisal, send it to the insurance company, get the contents coverage or whatever updated. Like, it's difficult, but I would imagine that squirrely, lying, procrastinating. I love you guys, but like, we are, our industry in general, like we're some squirrely MFers, right? Like, I mean,
I'll talk shit about you real quick.
Yeah.
Not you, but like the common thing I say as a media professional. I've obviously everybody here been, in real estate since whatever. But like the common thing I would say is like real estate investors, they'll spend $20,000 on an antique front door, but spending $5,000 on content, hell no.
Right.
Because they just don't value that. They'll value the
brokest rich people you ever met in your life.
Right.
Ain't that the truth?
Well, because I'll beat him up about 5 cents per 100 in insurance coverage.
Right.
But then the minute I need him, I'm going to call him. It's the same thing investors do with title companies, realtors, service providers. Like they try to get the cheapest thing, but they demand or expect, I'd say, the world-class service.
Right.
It's I don't know. It's my whole mantra. There's good, fast, and there's cheap, and you only get 2.
Right.
Yep.
And, I mean, cheap insurance is typically not going to be good insurance.
Now, sorry to put my podcast host hat on for a second.
Do it.
You got some really good questions over there. I know we're running a little bit long on runtime here. Where do you guys want to go on your set list there?
Well, that's the thing is that those were just – so I pulled those up just –
Did you chat GPT those questions?
Of course I did.
Smart man.
But like what Tim and I were talking is like, depending on who the guest is, like a lot of it is conversational. You're so far have been a great guest. Obviously, the podcasting of your own YouTube helps a lot because this game is all about.
We'll go with that one.
Oh, we'll go for it, man.
How do you see the role of insurance evolving in the real estate investment
I was hoping
landscape?
you'd do that one. It's funny.
Well, we've already done a lot of them, James.
Yeah. I kind of tipped my hand there a little bit with the Chat GPT reference, but generative AI in the insurance world is going to be an absolute game changer because insurance is 5 years behind every other industry, it feels like. We're really slow to adapt. There's a whole lot of legacy players, and there's several different layers of complications when it comes to regulatory stuff. It's run at the state level, so you have literally 50 different flavors of insurance in this country. Every single state is a little bit different. Unless we're talking about California, Illinois, New York, Massachusetts, then it's like, what in the hell is wrong with you people?
There's no flavor. It's just nasty.
Yeah, I mean, you have some insurance commissioners or activists, and like the stuff we've seen in California with State Farm pulling out, a couple of other companies pulling out, wildfire risk out the yin-yang. I think generative AI and machine learning, all these things are going to make the insurance policies more cost effective because they're going to be able to better price the risk, because they're going to be able to extract more useful data from third-party sources and see it at the point of quoting and rating a policy, which is going to make the individual loss experience of the policyholder a lot more relevant than it is right now, because historically insurance as an industry is run by the law of large numbers, and it's nothing but actuarial tables and frequency, severity stuff at the individual carrier. Everybody in North Texas is getting screwed because of everybody else in North Texas. And as machine learning and AI and these large data sets become more useful, it's going to make individualized pricing of property insurance a lot more possible, like you've seen in recent years with telematics and personal auto and commercial auto, where you plug in the little dongle in your vehicle, or you have an app, which, by the way, is the word dongle not the most awkward thing to say? I swear.
It wasn't until now.
And it's like, I don't know.
Wiggle.
Yeah, I don't know. Yeah, that's his little dongle shuffle right there.
My little
Your little dongle shuffle.
If there ever was going to be merch for this show.
Ryan's little dongle. Yep, there you go.
Ryan's little dongle. Jeez, James.
Oh, wow.
We just went there. I'm sorry. I didn't mean to go there. It's
Back
just
to the
somehow.
questions.
So anyways, personal
dongles.
So personal auto insurance has been doing this with telematics for a number of years. It hasn't really made its way into property insurance yet. I think with machine learning and generative AI, we're going to be able to take better advantage of the data that's available and get more accurate pricing that's more individual and more custom for the actual thing. So, a few years from now, the complaint of, I haven't filed a claim in 5 years, why did my insurance go up 30%? It's like, well, it's probably not going to be as common of a thing 5 years from now, because all these other rating factors, third-party data, is going to be a lot more accessible to these insurance companies. So they get to price the risk better, which, if you're a good risk, it means you're going to benefit significantly. And if you're a bad risk, it means you're going to get punished. And, all of the things that we talk about in loss control land, of pride of ownership, proactive maintenance, staying out in front of these things. Because what's the best insurance claim, right? Let me look at the camera. What's the best insurance claim? The one you don't have to file, because you did something ahead of time that mitigated the risk, transferred it out to third parties whenever possible, and nothing bad happened because you planned ahead. Can you plan ahead for a EF3 tornado? No. But can you plan ahead to make sure that your roof is in good shape leading up to storm season? If you need to patch something or do some sort of ceramic coating or whatever, there's all kinds of stuff you can do. Have you looked at all the stuff? Your plumbing, electrical, and HVAC and roof is where all of your insurance claims are going to come from, other than theft and vandalism. But it's one of those four systems you're going to have a claim on. What's your proactive maintenance plan? Do you have a property manager? You manage your own stuff. How are you handling, staying in front of these things that makes a future insurance
almost like the
claim better?
defensive driver discount on an auto policy kind of thing?
Yeah.
Like, what did you do in advance to make the risk less for the insurance company?
Yeah, and individual pricing of risks is going to become a lot easier in the future. So those proactive management things, people are going to be rewarded for pretty substantially, because as data gets better, as data portability becomes a lot easier for insurance companies to manage. They can reward the good risks and punish the bad risks.
What about self-insurance? Because, like, Tim and I mean, if you've been in this business long enough to know people that have properties at scale.
Yeah.
And then, like, if I've got 100 properties, 100 insurance policies, that'll get expensive.
Yep.
But if you've got the coin, and your properties are spread out a bit, like, at what point do you go, hey, maybe insurance is not ideal for me because I can just pay for it myself?
You need to have an agent or broker that's creative, that has good solutions available that are outside the norm. For instance, I mean, we have several clients at RiskWell that have hundreds and hundreds of properties where, I mean, their insurance premium is multiple six figures with our office every year. And a lot of those people choose to self-insure for everything other than a catastrophic loss. Their deductible might be 25 or 50 grand. And are you rewarded by the insurance company if you're engaging in creative, partial self-insurance? Absolutely. The things that I always like to talk about as far as like self-insurance, for the fixed loss, consider self-insurance. For the uncapped loss, like a liability claim of some kind, if it's a liability, you never know what it's going to be. Because if you have a domestic disturbance at a tenant-occupied property and there's a discharge of a firearm, traumatic brain injury, maybe there's a death, you have no idea what your financial liability is from one of those kind of situations. Never self-insure for a liability exposure, but if you have proper capital, then consider self-insurance on a fixed exposure like property.
Yeah, because I would never even consider that, because that makes complete sense. If, like, if I've got 1,000 houses and their average is 300,000, one goes up, cool, 300,000. I'll buy another 300,000 house.
Yep.
But like you just said, when it's uncapped, I mean, oh, by the way, that's $1 billion lawsuit. You're like, I don't have $1 billion. Well, I have insurance. Boom.
Yeah.
James said earlier that insurance is really just a promise. It was kind of funny. This was said at a conference last week. There's one insurance that on earth that it insures what's already happened. Title insurance. Because you buy that based off of what's already happened, right? The rest of the insurance it's kind of the unknown, specifically the liability stuff or commercial liability, general liability. I completely actually agree with this, because how much that AC unit's going to cost you. You know how much the roof's going to cost you. You know how much it would cost to rebuild the house. What are the portfolio options out there? Is it like a one size fits all, or is it an individual quote? How does that work? Is it just a conversation?
It really is a conversation, because depending on the nature of the portfolio, depending on where you are in the country, is going to dictate what the options are in the insurance marketplace. The most important thing, and I hate to keep banging this drum, is that anybody who's considering shopping your insurance program, the most important thing is that you're dealing with an experienced expert who knows all the ins and outs of the real estate investor world and knows where the lines are drawn from what companies like to do what, and has been around long enough to have some creative solutions like selective self-insurance. So for a portfolio, for instance, it would just come back to what assets are in here. Are we talking 1 to 4 unit residential across the board, or is there a mix of other assets? Do you have small multifamily? Do we have some mixed occupancy? Do we have some small retail somewhere, self-storage? We always like to carve out the commercial occupancy and put that on a schedule, and carve out the residential occupancy and then take that into account of 5 or more is one category, 1 to 4 is one category. And if you're the kind of investor who's just spread out on asset classes, you may have as many as 3 different master schedules, but they're going to be limited to, this is my schedule for 1 to 4 unit residential, this is my schedule for 5+ residential, and this is my schedule for commercial occupancy.
Speaking of that, I'm in the debt service coverage ratio lending business.
Yep.
Obviously, insurance premiums are starting to eat into investors' cash flow. The last couple of years, I think some of my properties are up 40% in premium.
Yep.
Crystal ball time. Rest of 23 or 24 into 25. You think rates continue to climb? Do we see another 15, 20, 30%? What are you seeing out there in the marketplace?
Unfortunately, we're not trending well so far with these weather events that have come up. I mean, there's been more tornadoes in the U.S. already this year than the average year for the whole year. And we haven't even really hit hurricane season yet. And typically, June to November is considered hurricane season. So I would say that climate change it's not a political statement to talk about climate change. It's a meteorological fact. Like we've seen the increase in severe weather events in the last 15 years is unavoidable. It doesn't matter if you vote Republican or Democrat, climate change is a fact of life.
Right.
We can look at the weather patterns and see that average ocean temperatures are increasing, which means that severe weather events are more likely to happen. When we had, what was it, like 125 was the heat index in McAllen earlier this week. It was like 125 in May? What in the world?
Yeah, I mean, that's a July temperature.
Like that's July and August. but to answer your question, I think we're definitely going to continue to see rate increase, maybe not as severely as it was from 23 to 24. To put my statistician hat on for a second, and this is a good little soundbite for this camera right here. In 2023, countrywide, there were 28 separate weather events that had at least $1 billion of incurred losses from an insurance company perspective. 28 separate billion-dollar loss events. To put it in perspective, the average in a given year, if you take the last 30 years, the average number of billion-dollar losses is 6. So in 2023, we had 28 $1 billion loss events. And it's an even bigger problem than you might think, because there's this thing called reinsurance, which is insurance for insurance companies. And most of those weather events fell below the threshold where reinsurance would pick up the losses. So the primary carriers, all the names we've all heard of, I just mentioned them before, Farmers and State Farm and Allstate and whatever, those companies buy insurance called reinsurance that helps them protect against a huge catastrophic loss, like a tornado hitting Houston, or a hurricane hitting Houston, for instance. But when reinsurance doesn't activate, all of these insurance companies that we all buy property insurance from, none of them have any sort of backstop. So all of their loss ratios get blown out of smithereens. And what's the only way an insurance company can increase their revenues?
Premiums.
They either get more return from their investment revenue, because when they hold your premiums, there's that arbitrage game between when you pay the premium to the carrier and the carrier pays out the claims dollars. In between, they're playing the stock market with bond markets and yield curves and all the stuff. Insurance companies love arbitrage, but in an increased interest rate environment, arbitrage game is really hard to play. So if the insurance company doesn't have the ability to increase their investment revenue, the only way they can get out of a hole is to increase premiums. And they only have 2 ways to get money. So I know this may be entirely too much information for a lot of people.
Oh, I love it.
But I freaking love this stuff because you feel it in your wallet. It's like, why in the world did my premium go up 35%? I didn't file any claims. Well, here's why.
Well, your risk went up.
Yeah.
I mean, or their risk,
The law of large numbers says the insurance company had a terrible year last year, which means they can't do anything but increase their premiums or else they'll go out of business. And then we find ourselves in a Louisiana and Florida situation where it's not a question of affordability of insurance, it's a question of availability of insurance. And that's a much bigger problem, I promise you.
So let's just assume it's available for my final question of the day. Investors out there, they're struggling with cash flow. They've got some lender requirements on what their insurance is. How do they contact you and your company, and how can you help them evaluate their options to maybe increase their cash flow?
Sure. RiskWell.com is the first place to go. We've got forms for everything. If you want a quote for a property, you can get it done in about 3 minutes on our website. We make it easy to find. We're all over Facebook and the investor groups in DFW. I'm guessing most of your audience is probably from the DFW area. RiskWell.com is probably the easiest thing to do. You can call us at the office, 469-678-8001. Once again, that's 469-678-8001. Call today. RiskWell.
Do
you have a theme song
Do
yet?
the dongle when you sing that.
The dongle shuffle. There you go, baby. Yeah. So, I mean, it is rocking a hard place right now, unfortunately. I don't know what the relief looks like other than pray for a really quiet hurricane season, and we don't have wildfires like we did last year, because there was like 15 different big wildfires that cost the insurance industry billions and billions and billions of dollars. For property insurance marketplace lives and dies on claims history. If we don't have severe weather events or if we have below average severe weather events, rate stability is a whole lot easier. But as far as making individual decisions, look at higher deductibles. Look at, perhaps actual cash value coverage. If you have the cash flow, if you have, you're looking at your overall operation and saying, yeah, you know what? If this burns, it burns. I'll take the actual cash value claim settlement and sell the dirt and move on. If that works for you, then great. Maybe look at diversifying into different asset classes, because I can tell you commercial has not been hit nearly as hard as residential. Not nearly. So for somebody who's just pissed off at the insurance marketplace and is looking for ways to get a better cap rate, to have better cash flow at the end of the month, look at commercial. I mean, whether it's self-storage, whether it's mixed use, commercial, whether it's strip centers, whether it's habitational, if it's class B and C office buildings with upside on value adds, then there's a lot of different ways to diversify your portfolio. But it's so much easier than just trudging ahead with your flips and 1 to 4 unit rentals. I'm a huge fan of commercial. I love commercial insurance. It is so much more difficult. It's a lot harder for my competition to know what the heck they're doing, because they're so used to rinse and repeat on homeowners and rentals and RVs and motorcycles and personal autos. It's like, oh, you step into the boxing ring, huh? And it's like Mike Tyson and Jake Paul. It's like, all right, good luck. No, you're in my ring now.
Well, I don't know about that. That's a bad analogy, because Mike Tyson, Jake Paul, it's like you get old farts like us. Like, Mike Tyson's going to murder him. But if you're rational, you're like, the dude's like 28 and he's the best shape. Mike Tyson's like 80 years old.
Jake Paul's a specimen. He's a complete asshole, but he's a specimen.
But he's an athlete, yeah.
Oh, the dude is a world-class athlete at this point, because he's been training for 2 years for this thing.
Right, and it's completely off topic here, but I'm just saying it's a bad analogy because, again, Mike Tyson, we're thinking 40 years ago Mike Tyson, not today.
Someone's going to lose an ear. That's all I know.
I hope so. I hope Mike is able to.
Vegas has a prop bet somewhere of, does Jake Paul have his ear bitten off like Evander Holyfield?
Well, just to wrap this up on this topic, in 10 words or less, 30 seconds or less, what is the one thing a real estate investor, new, experienced, needs to know when it comes about insurance, other than using RiskWell?
The easiest thing I can say is expect more from your agent. Hold them to a higher standard. Put their feet to the fire. Make them compete to earn and keep your business. Because if all you're doing is going out asking for quotes, you're a sucker. The insurance quote is the most easily manipulated piece of the equation. The insurance agent doesn't set the price. The underwriter does. Pick the right agent, and the whole thing is much easier. And you know what? If someone's sitting here watching this video going, you know what? My agent's doing a good job, then don't call me. Be loyal to your agent. If they've done a great job for you, if they're advising you, then stay with them. But if you don't have a great experience, then yeah, call RiskWell. We'll kick their ass.
Can't beat that.
Well, look, my final thing on this is, number one, like, I believe with all things, you get what you pay for. If you're an investor and you're building a portfolio, that portfolio, you have a responsibility to your family or your partners or whoever to protect it and to make sure that it grows and make sure that if there's a loss or a problem that you're covered. So don't take insurance lightly. I don't on my properties. Make sure you're properly protected. Make sure you understand the risk, and don't put it out to bid, but always look for maybe better advice if you feel like you're not getting it. That's kind of what I have to say.
Well, cool. Well, I think it's good. Obviously, you know what you're talking about, or at least perception-wise.
Either that or I'm a world-class bullshitter.
That's what I was going to go for,
So, to world-class bullshitting and dongle dancing,
we
covered it
all.
Dongle
shuffle.
Thank you guys for stopping by. We'll see you next time.
Excellent.